What's going on, guys? Welcome back to another video here on my channel. Thanks once again for tuning in. Today we're looking at SNCA. We're going to talk about why this crashed 65% intraday. Some of you guys might think it's from technical analysis. Some of you guys might think something else. I'll tell you exactly what it is, and then we will cover a couple other things. This drop happened because an insider sold $7.5 million worth of equity or stock onto the open market. This move you see has essentially been orchestrated in order to create that good selling point for the insider. I know you didn't want to believe it that markets are manipulated, but they are in fact manipulated, and it happens all the time. So what we actually saw today was a good run on a stock, and believe it or not, behind the scenes there was some manipulation going on that allowed the stock to get ran up today. There was definitely somebody pumping it in order to get prices pretty high, which would be create a good selling price for an insider. So what we're going to talk about is two things. We're going to take a look at this price point back in the past where it is actually a resistance, and then we're also going to take a look at the news chain down here. First, let's go back and let's look at the resistance. A common thing you're going to see time and time again is something like this. A stock gaps down, right? You see how it stops here and then opens up down here. It creates that space in the chart. That's an inconsistency, and the stock normally wants to fill that gap, is what it's called. It's called a gap fill. And then also, since it's seen as an inconsistency, many times stocks will reverse eventually and fill that gap that was created. So what you're going to see here is you're going to see the stock had jumped all the way up to about $4 today, which in fact would close that gap. And then it sold off. And that's something common you see. Once a stock jumps up, fills its gap, it hits resistance, and then it does come down. So it is normal for stocks to sell off after they hit their gap fill, but not like that. So now in the future, when somebody comes and analyzes this stock, what they're going to see is this really big selling day, and they might go, oh, well, you see it filled the gap and that's why it sold off. But little do they know, it's because somebody actually sold $7.5 million worth of stock onto them that day. That's what they're not going to be able to tell from this chart, and they will never know that unless they actually traded it this day, or they came across the Boiler Room Trading YouTube channel and watched this video, and then they'll know. But in most cases, nobody's actually going to know what happened on that day a year from now, other than the people that watched this video and me and the traders in our room. So what ended up happening was the stock goes up and fills that gap. So it gets to resistance. So what this is going to make the retail trader think, like I said, when somebody goes back and analyzes this move, in their mind, the uneducated or the people that do not know what actually happened, they're going to tell themselves that the stock just came up to $4 and that is where the resistance was. And that's why the sell-off started. And the reason it was so big is, yeah, maybe some crazy shit happened. But at the end of the day, what they're really going to be telling themselves is it got to the $4 gap fill, hit resistance, and it sold off. That's only a small portion to the story. See, what actually happened is this stock was ran up to create a good selling price that somehow coincidentally matches up with the perfect $4 gap fill, and then somebody sells $7.5 million worth of shares. That's actually what happened. His stock was ran up to a good sell point. Coincidentally, they matched it up with the $4 gap fill, making retail market traders just believe that this is resistance, and somehow that's a normal outcome when a stock hits resistance, when in reality it's not. See, what happened, if you look at the news channel, you will come to find, let's just go down and point to it right here. At 1400 hours. You will see Science whatever Biopharma announces exercise of warrants 7.5 million, right? That's what that means. $7.5 million worth of stock was exercised. Now, there's going to be many of you new traders watching this video that go, Connor, what in the did you just say? I have no clue what exercise warrants this or that. Am I going to jail, or am I exercising because I just ate a whole pizza to myself and I should feel ashamed? I don't know. But what I can tell you is in the market, when you exercise a warrant, well, actually, let me reverse that. Let's start it back. The way this works is the company, SNCA, at some point in time issued warrants. Really, what that means is they gave shares, essentially the power or the control, to an investor. And you guessed it, who is that investor? The investor was that asshole that dumped the stock. That's who he was. So the company issued warrants to an investor, and what that does is it gives the investor control to, again, exercise those warrants. And when he exercises them, what happens is those warrants really just turn into stock that he can now sell on the open market. So when you read that news down there and it goes and says, oh, let me go down there and get us to it. Where is it at? 1400. Yeah. So when they say exercise, announces exercise of warrants of $7.5 million. What that means is whomever that investor was that had the control of those warrants had decided that this was a good price to exercise at, and he turned all of those warrants into stock, and then he sold them and dumped the market. And that's exactly what happened. Now, let me explain the really mind-blowing part. As I said before, if you think for a second that markets aren't manipulated one way or the other, you should probably stop trading. Just as no, I'm not even going to say that because YouTube will definitely try to keep my video away from viewers. So I have to refrain from what I say so YouTube doesn't shadow me. I can't spill too much of the truth or else they don't like me. So we won't go there. But what you have to know that's really important about warrants is this. When you're issued a warrant, so when SNCA issues, again, those warrants, we'll just call it WAR, to the investor, INV, they could be issued to him, and those dollars are issued, or those warrants are issued at a subpar value of $1. Okay? And so if that investor wants to exercise those warrants and sell that stock, again, remember that if the warrants are worth or subpar values $1 and the stock is trading at 50 cents, why would he want to exercise his warrants? Because if his warrants right now are at $1 and he wants to convert them to stock and sell it at the open market price, again, that open market price is 50 cents. He's going to lose 50 cents. But if the investor waits until the price of the stock is over 50 cents and over $1, he will profit. So let me say this a little bit differently. The warrants are worth or issued at a value of $1. Stock is trading at $4, like it was here today. Investor made profit of $3. Can you imagine what the profit would be for $7.5 million worth of stock with a $3 profit if the warrants were issued at $1? He'd crush it. So again, investors don't want to exercise their warrants when the share price is below the value of their warrant, because if the warrant, again, is worth or subpar value of 2 and the stock is trading at 1, if he issues or exercises the warrants and sells it to the open market, those shares are only going to sell at where the market price is at, which would be $1. He would lose $1, essentially. That is stupid. He'd be a smarter investor to wait until somehow magically the stock gets pumped all the way up into this coincidental resistance of $4, which looks like a gap fill, and then all of a sudden dumps 7.5 million. My friends, ladies and gentlemen, that is exactly what happened today. There was an insider that exercised $7.5 million worth of stock and basically dumped this stock. And it just so happens that the share price at which it started to dump at and the announcement that they released about the announcement of the fact that $7.5 million worth of stock is going to be exercised or whatnot just so happens to happen at $4, which just so happens to be like the perfect gap fill resistance, which then inevitably would create a stock chart that looks like a stock simply just had resistance at $4 resistance. And anybody who looks at that stock chart in the future that doesn't know any better will have no idea what actually took place that day, other than the traders that were involved in the market on that day that are knowledgeable enough to know exactly what was going on. With that being said, ladies and gentlemen, that is all I have for you guys today. I hope you liked the video. I hope you learned something new. Make sure to hit the thumbs up button as many freaking times as you can. Break your damn keyboard, break your mouse if you have to, because the more thumbs up we get, the more people see this video. And I can guarantee you, there's a lot of people that need to learn this on YouTube. And if we don't smash the thumbs up button, guess what? YouTube will not promote our video. So with that being said, hit the thumbs up button, and I'll see you guys on the next video. Everybody, take care.